The gold price recently reached a new high. Today we'll be looking at some of the drivers and the prospects for gold in coming months. It's probably fair to say that the peace dividend from the collapse of the Soviet Union probably came to an end long before Russia's invasion of Ukraine. And although President Trump claims to be a peace negotiator, his transactional approach to international diplomacy unquestionably creates a lot of uncertainty. Moreover, sanctions restricting Russia's access to dollar reserves undermine to some extent the role of the dollar as the world's premier reserve asset. Since 2022, reserve managers around the world have increased their gold holdings, perhaps driven by a desire to hold an asset that can't be confiscated. Massive fiscal and monetary stimulus in response to the pandemic, along with a collapse in global supply chains, led to the highest inflation for 50 years. This undermined the role of bonds as a defensive asset class. In 2022, for example, both equities and bonds performed very badly. More recently, concerns about fiscal largesse and the resulting glut of bonds have weighed on the asset class. This has increased the attractiveness of gold as an alternative defensive asset. Despite these structural underpinnings, there are near-term risks to the gold price. A peace settlement in Ukraine could lead to a reinstatement of the dollar as the world's first reserve asset. Equally, a tech-driven resurgence in the Chinese stock market could see Chinese retail investors switch some of their significant gold holdings back into Chinese equities. Finally, the recent surge in the gold price is just so extreme that a pullback at some point seems inevitable. Nonetheless, we continue to see a place for gold alongside bonds, equities, and other alternatives in multi-asset portfolios. Thank you for listening.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value, and you may get back less than you invest.